Hey everybody, Happy New Year and welcome back to the Watson Blocks podcast. This show, as always, is brought to you by Giga Energy, a leading electrical manufacturer focused on Bitcoin mining. And before we get into the intro today, I wanted to ask for a huge favor. If you guys have not subscribed to the show or given us a rating and review, if you could take a second and please go do that now, it would be hugely helpful. This is the third episode of our brand new series that we are launching called the Energy and Bitcoin Mining Monthly News, where we have industry thought leaders Colling Eric at Luxor, Wolfie Zhao at the Miner Mag, and Eric Neal at Digital Power Optimization, or DPO for short. This format we're going to be rolling out once a month on the last Monday of each month, where we're going to be bringing you the hottest and most relevant news in the energy, Bitcoin mining, and infrastructure industries, with the hopes that this helps you guys identify trends and stay up to date on the latest. On this episode of the Energy and Bitcoin Mining Monthly News, we are unfortunately short Wolfie Zhao. Just due to time zones and schedules, this one just didn't work out. But man, was this episode absolutely packed with some awesome information. And seriously, you guys need to stick around to the end to hear both Colin and Eric and what they have available if you guys are looking for new sites or hardware right now. During the rest of the discussion, we get into ASIC prices are still running, and old generation equipment is starting to see a bid as there is continued supply shortages for miners. Eric then humors me and we go off on a tangent talking about regulated utilities, how they take profits, when they can take it, and we finally get back on track and we start talking about how the natural gas futures are going to add another layer of complexity and make it very interesting for miners post-halving. As always, Colin and Eric bring the heat with the news and the updates. And like I said at the end, if you guys are looking for new sites to develop for Bitcoin mining and hardware, stick around to the end and hear what Colin and Eric have to say. And so with that, I hope that you guys enjoy this month's news update. This show is brought to you by Foreman, the official miner management software of the Watson Blocks podcast. Foreman is the leader in Bitcoin miner management software. Guys, this software suite is absolutely incredible. Not only can you automate your curtailment program and cost avoidance, which, yes, those are two different strategies, but you can also manage all of your inventory from one clean dashboard. Whether you're trying to avoid peaks or executing a block strategy or needing to manage 3 to infinity miners, Foreman can handle all of this for you. They are the software stack that will scale up with your operation as you continue to add more megawatts and complexity to your power strategy. Seriously, guys, the best way to get a full understanding of the capabilities of Foreman is to head over to their website right now, sign up today, because it's free up to 25 miners. Seriously, you didn't hear that wrong. It's absolutely free up to 25 miners. Go get signed up today and get started managing your miner fleet like the pros today at foreman.mn. That's Foreman.mn. Foreman.mn. Hey everybody, welcome back to the show. Like I said in the introduction, we are back for another Energy and Bitcoin Mining Monthly News episode. As always, I'm joined by Eric Neal, the Director of Energy Planning at Digital Power Optimization, and Colin Kelly, Account Manager at Luxor's ASIC Trading Desk. We're a man down today. Wolfie was not able to make the show as per usual. Working through time zone differences, we're on pretty drastically different time zones, but we've got Eric and Colin and myself today to bring you guys some of the monthly news. Eric, Colin, good morning. Welcome to the show.
Morning, Ben.
Morning, Ben. Thanks for having us.
Yeah. And this is fun. So this is the last Friday of the year. We're going to kind of bring the year to a close, talk through some of the exciting news that's been going on this last month, and then, you know, like we were talking about just before we hit record, we'll probably do like a full year in review, a full recap. That sounds exhaustive, but you know, we'll do that probably next month to kind of kick the new year off. But I think maybe the last thing that I'll kind of tee up and just say before I let you guys take it away is the audience, you guys are going to see a lot all around the new name for the show. So we're going to be naming the show the Watson Blocks Podcast. And Eric and Colin, I don't know if I've actually told you guys ahead of time. I can't
Watson
remember if
Blocks. I love it, man. That's nice. Has a nice ring to it.
Hey, thanks. Trying to, what I kept running into is I talked to and this happened the most in the energy industry, but like, what the hell is hash rate? Is that like hashish? Like, is this, like what is that? And so I got all sorts of weird, questions around just the name of the podcast alone. So it's like, yeah, we need to change that.
I like it.
All right. Well, guys, we didn't really talk about which one of you would like to kind of kick the show off. So I'm springing it on either one of you, but
I'll take it. Yeah.
Awesome.
I think it's, Colin. I think it's tradition at this point. I kick things off.
I think you're right. I think you're right.
Awesome. So I'll just quickly talk about what's been happening over at Luxor and specifically the ASIC trading desk. Over the last couple of months, we've seen just an explosion of demand. So over the last 2 months, Luxor's RFQ platform has cleared over 2 exahash of machines. So we're talking, 20 to 30,000 rigs here that have traded hands. Yeah. So lots of big volume coming in, and just in the last month, we've really seen a large push from a lot of the public miners in the space to get in orders before the end of the year, and a lot of them with the target of upgrading their fleet efficiency. That seems to be the main theme here. Let's get rid of our old rigs that are 30 joules and up, and let's get something in the low 20s. So we've seen a massive push both on the liquidation side. They want to get rid of their old stuff, and then they want to get into the new Ferrari of Bitcoin miners, which is S21s, T21s, M60s, these kinds of machines. So a lot of the next gen machines are seeing some big demand, and that kind of leads into our next topic of ASIC pricing. I know last month I talked a little bit about what we've seen in the market, how the market's reacting to the added demand, and that's resulted in pretty large price increases almost across the board for new and used machines. So just, let's talk S21s here. Since pre-orders kind of kicked off at the beginning of the year, we've seen S21s increase in price over 45% since pre-order launch.
So they're not $14 a T anymore.
Nope, not $14 a T. Everything, especially if you want early month delivery, so January, February, March, everything's over $20 per terahash for S21s there. So
that's still not too bad. I mean, when I think back to some of the premium price per T on new units, that doesn't seem too wild, but that's a hell of a jump from 14.
Yeah, big time. But I mean, you hit on a good point there. I mean, looking at XP pricing just earlier this year, you couldn't get an XP for under $20 per T. So getting
25,
getting the next gen models with sub 20 joules per terahash machines for around $20 per T or under $25 per T, that's still pretty good bargain. And I mean, it just gives you so much more runway after the having these low efficiency machines. So it's I think it's a good thing for the market.
Absolutely. Colin, let me bring you back to, so that's kind of like the new gen. What are you seeing in the world of like M30s, S19, like 95 terahash models? Even those are starting to be considered kind of the, outdated almost. What What's the buyer look like on those? Are you seeing a lot of movement on those?
Sure. Yeah. So, um, although over the last 2 months we have seen new rig volume outweigh used rig volume, that's the first time it's happened in the last 3 months. It's kind of shifted, but used rigs are still hot. Especially those S1995Ts. Everybody wants those. They have great overclock and underclock ability, and they're at such a great price point that a lot of people are buying them and using third-party firmware like LuxOS or similar and underclocking them, getting some added efficiency gains there while just sacrificing a little bit of hash rate. So, um, but I'll tell you this: with the added demand has come price increases, even on used machines. So,
Okay.
just let's look back a couple of months. S1995Ts were clearing around $3.5 per terahash. Now they are clearing upwards of $5 per terahash. So even the old used machines are getting a price bump here. And I think that's just,
Okay.
everybody wants to get machines plugged in. So, and we've seen hash price recover quite significantly over the last couple of months. Although we are seeing some pretty big volatility there in hash price. Let's see. Today, I think we're sitting at um, $91 per petahash. Earlier this month, we were well over 100. Mid-December, we were sitting at 129 per
Mm.
petahash per day. So seen some hash price volatility, but still maintaining, these high 80s, high 90s. So I think it's a great time to mine if you got decent power costs.
Yeah. Um, I'm like selfishly curious. I think you and I, Colin, have talked about like the M30 series. I'm selfishly curious on the pricing on those. So
Yeah,
it's fun to hear. It's fun to hear that recovering, kind of in lockstep with the new gen stuff.
Yeah, I'm curious, Colin, if the people who are trading through Luxor are giving some insight as to why this uptick in activity in the back half of the year, if it's largely driven by expectations for future hash rate, or if it's just an influx of capital into the pubcos that happens to coincide with the end of the year, and people are looking to deploy capital that they got their hands on. Maybe it's partially market, partially some other forces. Curious what your insights are there.
yeah, absolutely. I think it's a combination of everything you mentioned. One, like there is quite a bit of capital flowing back into the space. We've seen Stronghold recently announce a fundraise. Um, Unblock, one of our buddies out in Argentina, just raised 15 million for a new gas project. Yeah, so we're seeing new capital kind of starting to flow back into the space. Also, there are some tax benefits to purchasing equipment before year end and kind of having those depreciation reporting for the next year. So I'm no tax expert there, and we definitely need one of our accounting guys to work through to explain the benefits there. But I know that is one of the reasons we've seen a big end of year push as well. Um,
I think
also,
there's still. I think you can still depreciate the hardware at 100% in the first year if you
right.
want.
Yep. Yeah. And mining stock prices have seen massive runs. I mean, you look at the big names, CleanSpark, Mara, Riot, they're all up several 100% this year to date. So um, that reflects people's interest in Bitcoin mining, and a lot of these traditional finance guys getting exposure to Bitcoin mining through some of these proxies like Bitcoin mining stocks or MicroStrategy or something like that. And when I talk to my clients, it's we need as much Bitcoin as we can get before block rewards get cut in half. It's mine as much as you can before the halving is a lot of some strategy that I'm seeing as well. So interesting market dynamics playing out for sure.
So Eric, I was sorry, I was just going to ask you, Colin, do you have a finger on the pulse for like what's the hottest, what's moving with the most like velocity, or what's the hottest machine right now that you see?
Sure. It's still the S19K Pro, man.
Okay.
The market loves this machine. And honestly, since the first couple of batches have shipped, I've been really impressed with the quality. When you have large machine demand for a singular model, typically you can get a good idea of what the failure rate is just by machines getting delivered and plugged in. And I gotta say, I've been extremely impressed with K Pro's durability and performance out of the box. So I think miners are making the right move, scooping these up. They seem reliable. We haven't seen too many issues with them. I would say probably a smaller failure rate than J Pros, and J Pros are pretty durable and tough machines. So um, yeah, pretty impressive stats all across the board with the K Pro, but the price point is what miners are gobbling up right now. But we've also seen massive increases there. I mean, when K Pro was released, it was clearing at $11.50 per terahash. Now you can't get one for under 13.5. So I've also seen some some really interesting speculative ASIC trades. Guys buying up pre-order machines and instead of plugging them in, just turning around and flipping them on the resale market for a couple of dollars per terahash profit margin. So yeah, there's lots of incredible things happening in the market.
Colin, are you also getting some insight into bottlenecks for new deployments?
Yes.
Whether it's energy interconnections or transformation equipment, switch gear, et cetera. And what's going to limit the deployment of new machines?
So I think if we're talking next gen machines, it's delivery schedule from the manufacturer is seems to be the biggest bottleneck right now, and has been these last couple of months with K Pro too. I know Bitmain pushed out 2 large batches of K Pros, I think 60 to 80,000 machines over the last couple of months, but it was met with um, several delays. So, people that ordered K Pros pre-order a month ago their machines were getting delivered several weeks late. So that's a big bottleneck is just, okay, can Bitmain and MicroBT actually handle this production volume? One thing that I've seen Bitmain do is, their BD team is all about closing deals. They'll close deals and take orders all day long. Now, can production actually keep up with that volume? I think they would just rather close the deal and find out later. So I'm optimistically hesitant about S21 releases. The latest rumors are that the January batch is going to be on time, but I've also heard that it might not be full quantities released. Like it might be only a portion of orders. So if you ordered 100 machines for January, you might only get 50% or 75%, and with the rest delivering at a later date. And the way Bitmain's contracts worked is they're not tied to any guaranteed delivery time. It's kind of you're just at the mercy of the manufacturer.
So it's kind of like ordering a Cybertruck.
That's a great example. That is a wonderful example. Yeah.
On the flip side, and that's great insight. I appreciate that tremendously, Colin. On the flip side, I'm curious, post halving, if you're getting any signals that there's going to be just a flood of older machines that are no longer profitable at sites that have bad energy contracts.
That is certainly a theory.
It has to happen, right?
Yeah, nobody knows for sure, but historically speaking, that's what we've seen in the past. Block reward gets cut in half, and old machines are no longer profitable. People unplug them and try to sell them on the resale market. if that happens, which I feel pretty confident that it will to some extent, I think you'll see a lot of M30S on the market. I think you'll see a lot of J Pros on the market. And I'm sure there's people foaming at the lips, ready to scoop those machines up for pennies on the dollar, So
I'm
it'll
one of
be
them.
interesting. Yeah, it'll be interesting to see how things play out.
Liquidate your ASICs to me. Yeah. But I mean, you think about it, like you bring up such a good point, Eric, like that almost has to happen. Just price is going to be what it is. The block reward is going to get cut in half. And, if you're sitting at even 7-8 cent power, it's going to be painful. And I mean, I guess you could leverage, some of your Luxor technology to, underclock and make your machines more efficient. But it's it's going to be painful for a little bit there.
Yeah, there's definitely limitations to that as well. Like, and every operation is different too. Like over and underclocking will vary from site to site. Not, the results aren't static. It's very heavily dependent on your environment, your operating conditions, how much humidity, how much heat is in the air. All of these things play in factor into the machine's actual ability to overclock and underclock. So, lots happening there.
Yeah. Eric, I almost put that question back to you in the sense that what are you maybe seeing and hearing as far as like ability for people to get energized? I mean, a year ago, you had extremely, extremely long lead times. I feel like the lead times are getting a little bit better on energy infrastructure, but how about we put that question back on the table for you? Are you seeing bottlenecks to get energized?
Well, our focus is largely existing infrastructure that's underutilized. So the example I come to almost always is you have a wind site that has transmission congestion and it's pushing power prices down and you put that load behind the meter and you alleviate some of that congestion. It's good for everybody.
Yeah.
So we talk to the energy asset owners. We're busy talking with energy companies in a number of different roles, but that's kind of our go-to for this question of what to do with some of these older machines. And it's, gosh, if you have, congestion issues at an existing generator, you don't have to worry too much about getting new load serving capacity. You still have to go through a process and there's still transmission questions that have to be asked and answered. But I think you accelerate your way through that process by going to existing pain points that the grid is looking for solutions to. And that's kind of been DPO's focus for years now, is finding those headaches, finding the energy companies that are willing to be innovative in how they solve those issues and willing to look at Bitcoin as an energy infrastructure solution as opposed to, some bizarre thing that they don't want to wrap their head around. And I think more companies are when you talk about the timeline and the barriers, I think it's less the infrastructure and it's more the decision makers getting comfortable that they should be, dipping their toes in this water and exposing some of their infrastructure to this marketplace. And it's largely education, right? Talking to people long enough to get them comfortable when, time is valuable and they're not spending a whole lot of time getting acclimated to the conditions of this market and how it operates. And eventually they come around, whether it's in a month or 9 months or 18 months, and say, oh, this is actually very familiar to me and it behaves a lot like a battery. I can actually get my head around this. And who knows, maybe the post-halving conditions, if they do surface a whole bunch of machines that are, fire sailing to go somewhere, maybe those are the right market conditions for somebody to pick these up. But, it's not the first time we've seen that happen. We've seen pretty good conditions for purchasing equipment in the past. Hopefully we've helped the energy industry advance their understanding of this enough over the last, 12 to 18 months where they're ready for the next fire sale of used equipment to go to those locations where, you're not looking at an 8 cent marginal cost of power. You're looking at a 3 cent marginal cost of power or a 2 cent marginal cost of power.
Yeah.
And I think I brought up on the last month's podcast, we were talking with one energy company in Oklahoma where, the last 30 days of energy prices cleared at an average of zero, right?
Wow.
Now that's not going to last. That's not going to happen every month, but it's happening in enough places where you have a tremendous problem of getting renewable energy delivered to where it's needed. And, if you don't have enough transmission capacity to get that energy where it needs to be, you end up with very, very suppressed prices. West Texas is a good example, right? Your load centers, the prices are tremendously higher than they are at some of the renewable generators out west. So put the load out west, and get it behind the meter if you can. I don't know if your listeners understand, and I'm certainly not an expert in the topic, but if you are delivering power from a generator in ERCOT, you have a node in ERCOT that your energy settles at. But if you're purchasing power as a load, you're buying it at a zonal price. And those two numbers can be very different because your node reflects the congestion at your node, but the zone is reflective of what's going on in the whole zone. And if you're speaking with an energy asset owner that has a very congested node, that price is probably settling much, much less than the zone. So if you get behind that meter, you can get you're as long as you're transacting in such a way that you're taking advantage of that nodal price that's heavily congested. Now your marginal cost of energy is tremendously lower than just going out and buying power from ERCOT.
Yeah.
So that's been our focus, is finding those energy companies that are willing to spend the time to understand that and how they can leverage this infrastructure, whether they purchase the machines or not. At least getting the infrastructure to house a tenant on site behind the meter in such a way that allows them to do business the way they want to and get a little bit of exposure to this market. That's where we're finding the wins.
And Eric, I was curious, maybe you can talk about this a little. What is the process for finding these kind of bottlenecked and congested energy assets? Are you looking for certain criteria? How do you guys find these opportunities?
Numbers, just reaching out to, 100 individuals, and, finding the 10 that are willing to have a conversation. And among the 10, the 4 that have the right conditions to develop a good project and advance the discussion has largely been it. I mean, we've pretty much I feel like we've talked with just about every energy asset owner in the country at this point. Obviously that's
Wow.
not true because there's a lot of little guys, but we've talked to, at least half of the big ones, probably more. And, we're spending, the time necessary to find some of the, large family offices that have, a couple $100 million of capital deployed in energy infrastructure, but they're not very, well known or publicized. And, kind of working the channels to get the contacts, to find the individuals that actually make the decisions on what to do with some of these renewable assets. And sometimes we're not surprised, of who we find. And other times we're, kind of shaking our head. Where do these guys come from? We never heard of this office before. And, they have 200-300 megawatts of solar and wind assets in the United States, and they have problems they've been trying to solve, and they're thrilled to be talking to us. So it's just a matter of staying out there in the industry, staying busy, finding contacts and getting in front of people. And, and some of these companies that I think are going to be taking action in 2024 and 2025, we've been talking to for years. And been under the NDA since 2021 or 2022, and it's just a matter of, like I was saying before, spending enough time with the right individuals to get them comfortable moving forward with some of this stuff. We have an energy company that we signed a service agreement with that includes some exclusivity to build up to, I can't remember if that one's 25 or 50 megawatts, and they're just kind of sitting on it. They're just kind of waiting for the conditions to be right, and maybe it's and the company I was thinking of that I can't state by name because of non-disclosure reasons is a regulated utility. And, their interest is finding the right time to get this conversation in front of their regulators and their regulatory consumer advocacy groups. They're ready to move. They're interested, but now's just not the right time, right? Things need to settle out in the right way for us to take a step forward in this space. So sometimes it's more predictable when companies are going to go because it's all profit driven, and other times it's a bit of a we'll wait and see, when the dust settles, and then we'll move.
And now a quick word from our sponsor. This show is powered by Giga Energy. Giga Energy is a vertically integrated Bitcoin mining company that manufactures all of the electrical infrastructure needed to start mining Bitcoin. Whether that's medium voltage switchgear, PDUs, or power cables for your miners, the team at Giga Energy has you covered. Reach out to their sales team today for all of your electrical infrastructure needs at sales@gigaenergy.com. Use the word hash rate for the subject of the email, and you'll get 5% off your order. All right, now back to the show. Eric, can I maybe jump in? And we're gonna deviate from like monthly news here pretty hard, but I have to ask on we don't need names or even like a geography of where this utility is, but when looking at a regulated utility, can you maybe just help me and other people who are maybe interested in this? Regulated utility has a cap on how much profit they can make, correct? Like they're capped at like, call it 8 to 10% profitability at that utility company. And if they make over that, they have to give it back. Is that true? Is that correct?
Not every regulated
I'm seeing.
Not every regulated utility is regulated the same, but essentially there's an amount of capital that the regulators have authorized the utility to spend, and that capital has a certain debt equity structure with certain rates of return on the equity piece that have been approved by the commission. So it's kind of, if you in regulated, regulated rate making is a long conversation, and to sum it up is tough, but it's essentially spend the money we've authorized you to spend and do it prudently, and you can earn the return on the equity piece that we allow you to return. So, and debt cost fluctuations and O&M fluctuations can influence how the utility, tightens or expands the reins on their capital spend year to year. But it essentially requires the utility to go to the regulators on some periodic basis and justify the money that they're spending.
Okay. Where I guess what I'm ultimately driving at with that question is, if that utility all of a sudden brings on a customer, a load that takes up all of either the reserve or the excess electricity on their system, is there a potential that they make too much and then they have to figure out how to, like you just said, either justify spending more, or they have to do they have to figure out a way to return money?
It depends, right? There might be automatic pass-through mechanisms where that just handles itself, and the customers will benefit from the additional load being on the system. In other circumstances, there might be some, plus or minus bandwidth on, earnings, where if you underspend your O&M, you get to save it, unless you really underspend, and then you have to give it back. But my familiarity is only with two regulatory jurisdictions, and there are far more than that. So hard for me to speak to all of them. But in short, there probably is an incentive for utilities to do what they said they were going to do. And if they don't do what they said they were going to do, whether it's, on the upside or the downside, they probably have to answer to their stakeholders again.
Okay. Do you think, or have you heard, is that a serious roadblock, or could that potentially be a pretty serious hindrance and roadblock? So. No. Okay. All right.
No, I don't think so. I think in general, utilities are very happy to see new load. Having to deal with too much cash is usually a good problem.
I would have thought. I've heard rumblings that might not be, or that it might be a roadblock.
I think the bigger roadblock is if utilities are tight on capacity and you aren't willing
Sure.
to guarantee interruptibility in a way that aligns with how they plan their system, their ability to serve new load. And this isn't really a big issue with Bitcoin mining because it's so flexible. But, utilities are going to be going through that assessment of, do I have enough capacity on my system to serve this new load?
Okay. Yeah, and I guess that makes more sense. I'm still trying to figure out the whole regulated utility. I think, Eric, maybe you and I need to do like a full separate episode or like a round two between you and I where I can maybe pick your brain. Like I said, I was going to have you deviate from the monthly news stuff pretty hard there. So I appreciate you humoring that.
I hope in 2024 we're able to speak a little bit more freely about some of these regulated utilities that we've been engaged with for the last 12 to 18 months, and point to some news articles about projects that are actually moving forward and conversations that are being had in the public domain with those regulatory stakeholders.
Looking forward to it.
That would be pretty cool.
Hey, so y'all want to switch gears here and maybe chit chat about spot Bitcoin ETF news?
100%.
Well, Colin, let's put a pin in that because I'd love to. Eric, I think you also had a piece or two that you did, and I want to make sure I give you just a little bit more runway to. I think you had another topic that you wanted to kind of talk through, work out as far as like news. So just before we switch gears to the ETF, did you want to touch on that?
Yeah, it kind of ties into market activity that Colin was referring to earlier, or at least my curiosity and what was driving that market activity. And it has to do with gas futures kind of going off a cliff in the last 30 days. The back half of 2024, gas is trading sub $3 at the Henry Hub, $3 an MMBTU. And front half, I think it might have dipped below $2 at one point, but it's sitting in the low twos right now. And, I'm really curious how that's going to play out in how Bitcoin companies contract energy, right? If you already are locked into a long-term PPA, you're going to be interested or worried about that a little differently. But gas prices are so heavily tied to energy prices, especially in the on-peak. And when you see gas futures fall, we can speculate as to why they're falling. There's a lot of supply and demand pulls and pushes that go into that. But when gas prices fall, I suspect that you're going to see less volatility in the on-peak or less frequent hours where Bitcoin miners can shut off their mine and sell their fixed price PPA back into the market and capitalize on that. So my gut says that you're going to see less money getting made transacting PPAs in the day ahead in real-time markets. But I don't know, maybe Colin's getting some of that insight from people who are buying equipment. Ben, maybe you have some insights there, but I'm really curious to see how these lower gas futures play out in 2024.
I'm going to take a stab and say, Eric, I don't know that a lot of them are maybe tracking it with the same kind of sense that you are, because I see what you're saying where gas futures are less expensive, which means there's going to be less need to curtail. And you look at a group like Riot that, what did they make? $31 million in 1 month off of curtailment programs.
And obviously the major spikes. The major price spikes aren't because of natural gas price, right? It's just a severe supply shortage. So I don't know that gas price is going to affect that all that much. But, to the extent that you have a combination of gas price and scarcity causing, maybe it's not, a quarter of a percent of the year that you're capturing some of those opportunities, but it's 5 or 6% of the year. Well, now gas price, starts to make a difference there a little bit more, especially after the halving. And the halving's coming.
And that was going to be the final point that I made, is that this starts to hurt even more when the block subsidy gets cut in half. And,
right.
you've started to bake into your profit certain amounts of curtailment that may not happen this next year because of what you're seeing and saying. Boy, that gets interesting. I don't know, Colin. Have you been hearing anything about that? Has that been popping up in conversation?
Not so much on my side. A lot of the clientele that I have for stranded gas mining or something similar like that, typically more small scale operations. Half a megawatt to 2 megawatts maybe. So, haven't been hearing too much about how they're affected by the gas prices. Certainly interested in hearing more about it though.
Yeah, what comes to mind is if somebody locked in energy costs in a PPA a year ago today, they were doing so when gas futures were sitting at like $4 for next year.
Yeah.
And now they're sitting at, $2.50. Right? So if you locked in your energy cost a year ago, you probably overpaid, is the way I look at it. Now, again, there's a lot of supply and demand pushes and pulls on the energy market as well. But you look at, the gas markets, and they're a pretty good indicator of movement in energy markets, thumb in the wind. So again, DPO isn't in the business of locking in long-term energy contracts. We're in the business of solving energy headaches and being very flexible with how we utilize this infrastructure to help energy assets be, more optimally deployed into the market. So we're interested in this, but we're not really exposed to it. But I'm really curious how this is going to affect some miners who maybe were expecting to bring some machines online based on, forward energy market conditions. And now they're not looking so good. And maybe they're going to be underwater and, coming back to Colin to say, hey, we got some machines, to sell back to you.
It's going to add a whole new layer and a whole new dynamic to it. I've got a couple people in mind, Eric. Now that you've brought this up, I'm actually going to ping them after this because I'm actually really curious. I know a couple of people that are probably looking at this, but I don't know. I don't hear enough about energy trading strategies at these, especially the really large. They're either really quiet and secretive about it, or they may not have that desk set up, or they're relying on a third party desk. That could get interesting.
Well, if hash price is good enough, you don't worry too much about it, right? It's, hey, we're profitable enough to continue doing what we're doing. But again, I'm thinking post halving, there's going to be a lot of activity. There's going to be a lot of people, scurrying to find better energy costs.
Mm-hmm. Yeah. All right, Colin. Let's take the pin out of the ETF discussion. So
let's do it, man.
Yeah. What did you have in mind to kick that off? That's a whole ball of fun.
Yeah. Well, for me, I just seen bullish signal after bullish signal. Really what was interesting is kind of Bitwise putting out that commercial, almost like front running the approval news. They're saying, hey, we're marketing our product now. So little signs like that kind of throw up some flags of like, hey, this could potentially be going through. And then other things. So like recently I was reading about Cathie Wood's ARC. It just sold all of its BTC position. So is that
I thought I saw that too. Yeah.
Yeah, that's really interesting. Maybe they're, clearing the way to launch their own ETF. And then just yesterday, Cathie Wood's ARC filed an updated Bitcoin ETF application. So just one day before the December deadline. So that to me is, they're working out the final bugs and tweaking their contracts and getting everything in order. And I feel really, really bullish about an SEC approval here.
I do too. And I think the latest we could see an ETF drop is it February? Right? So like if this is going to happen, it's either going to happen in January right away, or it could push out to February, I think.
And what's even more interesting to speculate on is who's going to get approved, and does somebody get approved first before others, or do they approve everybody at the same time? Um, that'll be really interesting to see play out.
Yeah, and I think the biggest thing that, to kind of keep a mining lens on this particular subject is, like, we need price appreciation to get through the halving. Like, we
Yes.
need the price of Bitcoin to go up to keep operations healthy, and to keep, the cash flow healthy. I'm looking at like a model that I put together, and I think this is right, but if you have, maybe Colin, because you guys at Luxor, you guys are way more plugged into this, but if you have 5 cent power and you're using older generation machines, like 3200 watt machines, come the halving, the break even price that you need to see on Bitcoin's over 60,000.
Wow. Yeah.
So we got a little bit of ways to go before you're breaking even at 5 cent power.
Yeah, definitely. And looking at that breakdown of what machines will run profitably after the halving, given current hash price, that's why everybody's in a hurry to get into S21s and these next gen machines, is because they're looking at those same numbers and going, oh shit, my S19J Pro, my M30S, I'm going to be well into negative territory here after the halving. So that's, I think, one of the main drivers of next gen equipment procurement.
Absolutely. I mean, just to like put a number on that again, because I'm like off on my other screen looking at this in real time. So if you put in the efficiency of even just, so I had like the efficiency of like an S19 95 terahash,
Yep.
it's like 3200 watts, or it's like 3250. And then you put in like the efficiency of an XP, it takes your break even post halving from 60,500 down to 54,000. I mean, that's, so it's just what I'm getting at is like it's a material benefit to increase the efficiency of your fleet substantially. So yeah, what you're saying is spot on.
Yeah, and then getting back to ETF news and the bullishness there, MicroStrategy comes in with another big purchase of 14,000 Bitcoin. A $615 million purchase. It makes me think, does Sailors know something we don't? I mean, we know how much of a Bitcoin bully he is, but is he filling his bags before the big launch, or what's going on here?
I hope so. It's it. I say that because this, this is really kind of my first full cycle through everything Bitcoin related, and I'm personally, the Bitcoin position that I bought and put on has been a little bit painful to get through. It's been a painful bear market for me personally. So I'm ready to see the price run, and ready to feel like I made a good decision on buying a whole bunch of Bitcoin. I mean, obviously outside of all the other reasons that you buy Bitcoin, but the price appreciation is fun. So yeah, Colin, I hope so. It'd be really cool to see all the ETFs launch at the same time. Which from, you listen to people like Preston Pish and the folks that he has on his podcast, and they all seem to think it's going to be all or nothing. Like it's not going to just be one.
I
So,
mean,
I don't know.
that would be the most fair way to go about it, but I haven't known the SEC to be, fair.
Yeah, no, that's a good point. That's a good point. Yeah, I stay so heads down on, it's just like infrastructure that I haven't been paying too much attention to the ETF stuff. So I'm glad you brought that up. It'd be really exciting to see that. I mean, that'd be a big unlock for a lot of folks, family offices, things like that.
Definitely.
Gentlemen, we chewed through almost a whole hour. It's bright and early on a Friday, the last Friday of the year, that's crazy to say. It's been an absolute blur of a year. So, if you guys have any final parting comments or tidbits or things that you'd like to kind of end the show with, I guess here's the opportunity to do so.
Sure. If you want to be mining before the halving, buy your rigs now. Is kind of my key takeaway. Is I'm telling my clients, hey, we're running into the Chinese New Year now. We're going to see some deployment bottlenecks there. Warehouses across Hong Kong and Southeast Asia are going to be closed for a week or two. So if you're planning on, making a big machine purchase, I think sooner than later is the best move for you, because not only are we seeing supply starting to really get scooped up and thin out, we're also seeing this added demand increase pricing across the board. And for, what I'm seeing from the data coming across the trading desk is we're not slowing down into the new year. I don't think there's going to be pullbacks on machine pricing or anything. And certainly, supply is thinning, like I mentioned. So, get your rigs and get them plugged in before they're all gone, and you're waiting for the next batch to be released.
Yep.
Yeah, and I'll piggyback on that and say, if you're struggling to find justification for new rigs at an existing site, and you want to move your existing rigs to a different site that has a lower energy cost, and you're struggling to find a good site, maybe call DPO. We just, right before Christmas, we signed another 100 megawatt energy supply agreement with a renewable energy company in ERCOT.
Wow, massive.
Well, it's pretty great. We're really excited. But maybe by the time this podcast releases, that'll be announced, and there'll be a press release of some sort we can point to. But
do you have a customer for it?
It's not filled up yet, right? We have,
Okay.
the first deployment spoken for, and we've got more coming, hopefully, by the time this podcast goes live. But chances are, a week from now, we're still going to have some room to fill up. So give us a call.
How much? Like capacity available?
Let's just say the better part of 100 megawatts. The ink is still drying on the service agreement. So,
okay.
I think as soon as those projects, as soon as there's an energization date that's stamped on paper, the capacity is going to come right behind it.
All right. Well, you heard it here, folks. You got Colin for your hardware, and you've got Eric for your power. So let's, audience, kick off the new year with a new site and new hardware, right?
Let's do it, man. Love it.
All right. Well, guys, thank you for your time. This is always a blast. I not only really enjoy getting together with the both of you, but then, we get to bring news and updates, and then, you guys both share that you have stuff available for the audience too. So I very, very grateful and thankful for your guys' time as always, and we'll see you next month.
Happy to be here, Ben. Thanks for having us, and we'll see you guys next year.
All right. Yeah. Cheers to the new year. Thanks, Ben.